Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? All is good? Welcome to the Closing Beat. We are financial advisors here at Jazz Wealth. You know the story, right? The logo, the shirt, it's all there. I really thank those of you that have decided to join us here lately. We are a small fish in a big pond. We like that sort of approach, and appreciate all of you who have given us a chance. If you have old IRAs, you want to start saving for retirement or for the long term, you want a financial advisor, someone to help, well, sometimes kick you in the butt along the way. I've had to do a lot of butt kicking lately. Sometimes people like that. Sometimes people don't, and we find out after it happens. Well, hopefully you'll check us out at Jazz Wealth. Every now and then, sometimes what's helpful is when you want to do something and the person that knows everything about your money and you and your history goes, you lost your mind? What are you doing? No, you can't do that. I mean, if you do it, it's fine, but you're ruining this. That's certainly helpful there to hear from an unbiased party. Anyways, the title of the show today, Never Be Bearish on a Boring Stock Market. And truthfully, I just named it that so the algorithms would pick it up and realize what we were talking about. But the actual saying is never short a dull market. That is, like it goes along with all the other ones we've talked about. Sell in May and go away, Labor Day and all that stuff. Santa Claus rally, Well, one of them is you never short a dull market. And all that basically means is you don't bet against a market that has really low volume, kind of a lack of interest, just quietness for the day, because what happens is like what you saw today, where the stock market drifts higher and higher, right? The stock market has a natural drift to the upside. And so when there's no news, we're just pricing in future earnings. We're behaving normally. You mean there's no Fed interjection? The government's not spending more money? It's just like, oh, we can really assign a value to a particular stock, assign a value to an index. Oh, well, isn't that unique there? The markets can move freely, right? And so that's what kind of happened here today. Very dull market, very low volume, at least for the most part of the day there. And so you get a drift higher as a short-term trader, a day trader or whatever. You got to live by those rules, because the second you try to short a dull market, it is frustrating, speaking from experience. If we look at the S&P here, we were up 3.5% last week. Of course, that means the first quarter was positive for the first quarter. About 7% gains on the first quarter there. That's the best 3 months in a row for the last 2 years. I'm going to try something here. So you have a market that gained 7% in a quarter. It's up 3.5% for the week. And yet there's still people out there going, I think that this is the end of the world. Oh my gosh, the market's due to crash. I'm not sure where we're getting this from. All last year, the markets fell, big bounces, yes, but they fell throughout the whole year. And not a peep. I see the comments. I'm watching, I'm reading. Not a peep. And yet now we got the markets going up. Best back-to-back 3-month window that we've had in 2 years, and people will say, well, this must be wrong, right? So what's going on? Like, what's the fear that's out there? I'm not certain. I'm trying to understand. I watched all the news this weekend, tried to get a part of it there, but I don't see it. So where do we go from here? Well, we have a lot that we can actually talk about. We're going to go to the NASDAQ first. I do want to point this out. So NASDAQ up 16% in the first quarter. January, February, March. In other words, you could say 16% year to date. That's the best quarter since COVID, coming out of COVID, to be honest, when we were rebounding from that decline there. Wow. Like, there's just no fear. The only fear is from the people that say, I got to go put my money in gold or something like that. More on that tonight, actually. The Jazz After Dark here tonight, we're going to focus on the best timing to put your money into gold, the best timing to maybe not participate in gold. But nonetheless, there's just not a lot of fear in big tech stocks, large cap growth stocks, high income, high growth stocks, or I should say high margin, high growth stocks. It's just no fear there. If you look over at the Dow, okay, this is a little misleading. So the Dow's doing really well here. Biggest gainer today, thanks really to 143 points coming from United Healthcare. We'll cover that here in just a little bit. But of the Dow's gains today, 143 points was purely UNH. Big stock, the most expensive stock in the Dow. When it has a good day, you better be confident that the Dow is going to have a good day there. I also want to point out 45 points coming from Chevron. So in other words, about 200 points, 190 something points, 797 points coming from 187 points coming from two different stocks. That's not super common, but on a day where energy had such a good day and healthcare, in particular United Healthcare, got such good news there, okay, you've got a recipe for the Dow to be higher on the day. So is the world going to end? Is there going to be a major catastrophe out there? It's looking less and less like that every day. We can have pullbacks, and we will have pullbacks. The market is, well, basically every index is now finding itself overbought in the short term. You will have pullbacks, but are those not buyable pullbacks? Are those a reason to believe doom and gloom? Think of all the stuff I've shared with you that has nothing to do with my opinion. It's stock market bottoms in during recessions. When the stock market has a good first month of the year, so goes the rest of the year. There's another saying for you. As January goes, so goes the rest of the year. Is that not coming true so far? It's fascinating. Third year of a presidential cycle. How does that perform? Really well, right? We've shared that with you. So all of this stuff is lining up. And now it's not so much good for inflation, but energy prices, oil prices skyrocketing based on what OPEC did there. So we don't have this recipe for the end of a world. I like your thinking a little bit because you're like contrarians. You're kind of like me in a way, but I'm not seeing it. I see a market that says when we do pull back, that's your opportunity. If you didn't load up or get a few bucks in the market, then that's your opportunity. If we happen to pull back a little more, okay, that's your opportunity. We're going to rally and then we're going to pull back. That's where we're at the moment, and that's really, all there is to say about that. We don't have to beat on that too much. All right, let's talk about some of the big things here today. You might have noticed oil. It's one of the bigger days, and I should say it's one of the bigger gap and go days that oil has had in quite a while there. OPEC, and actually I wrote it down because I wanted to look into this with you. You got now $1.2 million barrels per day of cuts announced, where 44% of that will come from Saudi Arabia, 18% from Iraq, 13% from the Arabs. Kuwait's going to do 11%, Kazakhstan 7%, Algeria 4%, Oman 3%. So they're all chipping in and doing this. Russia, this is really tough for Russia, actually, if you follow the global news there. That is the biggest gap up since during COVID, April 2020, if you're going to look back and actually want to see how that went. We have, is this a big deal, I should say? The fact that we're seeing this cut from OPEC. Now, this will start in May, and it'll go to the end of the year, by the way. This is not like ongoing. So this goes to the end of the year. Naturally, that's going to cause higher prices, but you can see that there. Is it a big deal? Not really. It's more symbolic than anything. It shows that what they can do and what they're willing to do. But we output about 100 million barrels per day over the world right now. That's about 1% of the global output. So it's a very minor cut, still lots of dollars, of course, we're talking about here, but it's kind of a minor cut there. Nonetheless, looking around at energy stocks today, that if you didn't have an energy stock that went up, something's wrong today, right? Almost the entire energy sector green. Valero is the only one that finished the day down, right? Valero, I'm sorry, and EQT Corp. Valero being the larger of the two. Otherwise, incredibly strong days for, well, we mentioned Chevron already, so I won't go back to that. ExxonMobil. Those two names, by the way, are the leaders, the big, hefty weight in the energy space. So obviously, that's going to help lift energy for the day. Where do we stand? A little bit of a rewind, a little bit of a review here. Let's take a look. Sector performance for the first quarter of 2023. There are some huge divergences here, and we're going to explain what that means in just a second. Here's the S&P first quarter, 5.32%. Actually, it's a little bit shy just because of including all of Friday's data. But if you look over here, consumer staples, what should be strong in a weakening economy is not very strong. Real estate, utilities, healthcare, what should be strong in a weakening economy, no one's interested in. For the first quarter of the entire year, nobody cares. Financials, you know that a lot of that has just recently come, thanks to those banking issues, which I'll talk about in just a second. Over here, consumer discretionary, communication services, and tech, stocks that should not be doing anything good if the economy is slowing down. They are double-digit gains. So much so that I thought, I'm going to focus in on that for a second. Double-digit gains in a quarter That sounds odd. It sounds kind of interesting, right? Here is the average rest of the year performance after a 1/4 double-digit gain in those three sectors. I gave you the ETFs down here at the bottom so that you could use those as well if you want to do your own research and feel good about that as well. In communication services, now I'm not saying that they will outperform. We're looking for moments of extra tailwinds. That's what you're doing this for. So for the average rest of the year, when we have double-digit gains in a quarter, the average performance, 15.46% for the rest of the year in communication services, whereas any time period, average gain is 4.66%, essentially saying for any 9-month stretch after the first part of the year, what is the performance? This is not to look at and say, ooh, well, then I'm going to go make double digits by investing in this. It's to show you that there is outperformance at the moment that is beyond what it should be. You can read that two ways. You could say, well, this is just really extended, likely to pull back. Or you could say, that's where the momentum's at. Maybe I'll look at it that way. Consumer discretionary, same thing. Average performance over a 9-month stretch, 7.54%. After having a double-digit gain in the first quarter of the year, 14.27%. This gets a little more interesting. One second. And tech, 13 versus 11. So tech is just slightly outperforming itself, or is projected to slightly outperform itself going into the end of the year. Here's the cool part. What percentage of time are those sectors positive? So it's one thing to say 15.46% is what it is. There's only 4 times that that's happened. So we only have 4 data points to actually give that to you. What happens if one of them was like, or what happens if 3 of them were minus 1%, but then there was one that was plus 40%? Okay, well, so it's skewing the data. Nope, 100% of the time when the first quarter has a double-digit gain, you see momentum continue throughout the year. Again, it doesn't mean there won't be pullbacks. Please do not mistake me for saying that. There will be pullbacks, but the perception is when there is such strength that that pullback must be buyable, because 100% of the time it finished positive for the year. Consumer discretionary, even in years of weakening economies, when it has double-digit gains, yes, there are pullbacks. 100% of the time it finished positive. And tech is really not doing anything special in terms of outperforming on a percent positivity basis, if you're going to look at it that way. So what do you learn from that? If you are bearish right now and thinking like, protecting money and the banks are failing and all this stuff and gold, I got to go buy gold. Number 1, see our class tonight. It's going to be great. Number 2, you're wrong. Everybody's telling you you're wrong. I kind of hope you're right because I would like a pullback myself. But at the moment, everyone's going this way and you're going that way. What's going to happen? It's kind of tough there. And speaking of financials, by the way, let's go back over here to financials. I'm a nerd with this stuff. I like to look at it. It's the latest Fed report, the H8, they call it, comes out on a weekly basis there. This is really fascinating. Okay, the banks did better on Friday than they did today. But that report literally shows money moving second by second basis. Where is it going? Turns out, yes, SVB Bank was a big deal. They were sort of victims of their own success was kind of how that was labeled. And, you know, maybe shame on them for not diversifying, but they paid the ultimate price. It turns out that money, they track the number of deposits, the actual dollars of deposits going into accounts and dollars of deposits going everywhere else you can go. Turns out that the reduction in deposits at small banks directly correlates to the dollar amount of deposits into money market funds elsewhere. Isn't that fascinating? In other words, what it shows is that we, as humans and people saving our money, have just said, well, my bank's not paying me anything. They're a small bank, and maybe some of them are failing, but they're a small bank. They're not paying me anything. However, I can go over here, and I can put my money into a money market account and get 5%, 4%, whatever it is, right? So we've all just been doing that. That's the culprit. Rates are higher. We said, well, let's just go over here, make some more money on this. Not people running away from the banks. There may be just a skosh of that in there, but that's what's causing these banks to go, oh no, we don't have as many deposits. They're not competing just yet. That has changed, by the way. very quickly. But they're saying, oh, I have money in this bank. It's making me a penny every quarter. That doesn't make any sense. I'll go over here and get 4%. We're all doing that. Good for you, by the way, for doing that. But that has dramatically caused that banking issue that we've seen. And now we can actually see it in the numbers. We can see the dollars being moved over there. Quite fascinating there. We just want higher savings rates. That's all we're asking for. And unfortunately, it meant that we had to make a few banks, well, not survive. Speaking of not surviving, yeah, let's do that there. Speaking of not surviving, Disney's Metaverse division, gone. It's about 50 employees. They said, look, this has just been, you know, we've had low user demand. There it goes. Give it just a second. We're back, man. It did it, right? It fixes itself. Talk to me. That's good, right?
Yeah.
Sorry about that. It went away for a second, and then it was like, don't worry, we got this. Our AI in the background just fixed everything. Just kidding. Okay. WWE. In all fairness, we have owned this stock for a while. It's been a great performer for us. Today, a bit of a down day as they get acquired by, well, it's a kind of a partnership there with the UFC. There'll be a new ticker symbol, TKO, right? Oh, you want in on this? Where you at?
I don't know what camera.
Oh, he's not set up there. The voice of God today from Cody, okay. So WWE, the TKO is a ticker symbol, right?
Great ticker symbol.
It's a perfect ticker symbol, really.
Yeah, I'm a fan.
But you don't lose anything. As a WWE shareholder, you're going to be rolled into the equity of the new publicly traded company. I don't have a timeline on that, but we will be keeping the shares and rolling into that. It's been a great gainer for us, but that's the news. And can I just point out, Vince McMahon, you won't be able to see Cody, but look at this man here. Let's get rid of that. Look at that dude.
That's a great picture. I love that picture.
What happened to the guy?
He was going for a rebrand. He had to go for. It seems like he had to go for a little bit of a rebrand there.
That's not Vince McMahon.
No, he's looked rough recently, but
I really worry about that guy. That's like, I look at that and go, what if Walt Disney himself was playing a bad guy in a movie? That's him.
Yeah.
I feel bad. Something's wrong.
Something does seem wrong. Yeah. But I kind of like the look.
Oh my God. Yeah. Well, it's a good look maybe for him, but not when you're used to seeing the other guy.
Yeah.
This think that something's going on there. Anyways, let me pop this back here because guess who our Guess the Dow winner is? Do you
Dustin. Dustin D, not you. Not you. For
Not
anybody
me.
that thinks it was you. It was
Not me.
Dustin D, who's actually in the chat quite a few times. I haven't seen him today, but he was the winner of last week's Guess the Dow. So I'll email him right when the show ends. But yeah, good for him. Won $100.
Dustin D with the win there. That is not like conspiracy or anything. Cody told me earlier who won, and I was like, oh boy, the people aren't going to believe it. But he was officially the closest guess without going over. If you want to guess, you want to play our game, no strings attached, we will really be sending him $100. Jazzwealth.com/guess the Dow. Tell me where you think it's going to close. And if you're the closest without going over, we'll send you a $100 gift card, just like Dustin D. Or if you're a client, we will, of course, credit your account if you want us to do that as well instead of the gift card. You only get one, but you can play as many times as you like, and you can win as many times as you like. We can't play, right? We don't play.
Can we not play? I play.
We can, I mean, I know I play, but we could play, but I mean, like, we can't be the winner. It's kind of like an inter-office game, right?
No, well, I'm going to quit playing then if I can't win the $100.
Well, it's not very good if you've been playing and you haven't won.
I played 5 times this week. I know you can't play that much. I played this week. I was excited to win. I didn't know we couldn't win, but it makes sense. But
okay, well, let's do it that way. That's only fair. We do control the data, I guess, so it's not like the lottery.
Yeah, but we don't control the Dow.
We don't control the Dow? Yeah, it's true. Okay, yeah, that's what it is. Apple, well, I don't know. They're going to do their VR headset. They're going to do a reality headset coming up here. It should be June. I don't know if there's going to be a big launch for that. I'm not sure I understand that, but that's what it is. UNH gets a 3.32% pay increase from Medicare. That's why the stock was up here today. It's less of a payment cut than they were expecting. I think it was less by like 1.1%, 1.2%, something very minimal. So 3.32% pay increase from Medicare. And that's a lot of money, by the way. That doesn't sound like a lot, but it is. And McDonald's says, whoa, hey, employees, don't come to work if you work in our corporate office Monday through Wednesday, if you would, and cancel all your meetings with people because we're going to be virtually firing some people. So we prefer that you're not in the office when we do this. And anytime stocks, besides the two names there, anytime stocks lay off people, get slimmer, get thinner, the stock tends to go up, which McDonald's has done there. Like I said, Jazz After Dark tonight, we're going to talk about when to buy gold in your retirement accounts. A little bit of tough love there for you because I can't for the life of me figure out why I've been getting this question. And I'm dying to know, like, there must be advertising that's just doing really good, in which case I want to study it and I want to market myself right along with them. But my God, we're going to talk about it. The data, not my opinion. All right. I'll take your questions if I can happen to figure this out. I should be able to figure it out because, you know, I'm not old yet. Still got this worked out here. But I didn't do it correctly, so I'll go back over here. Hope you guys are doing great today. I will try. See what I can do. There we go. Okay. You want to get some SGHD for diversification in your portfolio. Too heavy in tech, but I don't see the ETF. You don't see the ETF as discounted. Bad time to add to a big position. So the market itself, in the short term, is overbought. So really anything that's participating with or better than the market, it is a tough time to say, yes, now is the very moment that I want to add more into it. I would also look at the type of account you're holding that particular ETF in. Does that make the most sense for you in that one, or should it be put in a different account? You didn't mention the account, so I'll let you rest with that one there. Yeah. What are you guys, buying land or something? I'm in. I'd like some land. Yeah. You going to load up on some bank stocks there, Doc? I don't know. I think Eric's loaded up for the both of us there. Eric's been playing along with this bank thing here. Some good, some bad. You know, they've come back a little bit, but not that rip roar and pullback that I think a lot of people were thinking. Oh, I'm sorry, rally that a lot of people were thinking. Yeah. Oh, you got the Bank of America. So same thing there. I don't know. I'm on the fence here. You could convince me either way, which is, for me, whenever I do that, I say sit on my hands. When we fell, we decided, yes, okay, we've stabilized here. We're going to add some to our bank stocks. I'm not willing to commit to more at this point. I don't see any real excitement there. I hope that changes, but I don't see more than that. Oh, in Canada. Okay, so an RRSP. Then in that case, fine. Yeah, just the timing of it still. I'll keep that part of my comment there. I just want to make sure you didn't have it in like a brokerage account or a cash savings account, depending on the country you're in. You want to look at J&J. There it is. Oh, it's nice, huh? Hey, Dustin, opinions on starting long-term position at AXP here. You guys are all over the banks, which makes sense. Like if you're looking for that discount, you go to the banks, but yet what's happening? Why? Nothing's going on. We even have rates starting to help you out, at least in the first part of the day. And what's going on? Why doesn't nobody want to participate in these discounted banks? I have a sneaking suspicion that it's earnings season. The large banks are first up in earnings season. Then comes the smaller banks. Why commit to something now when we're just about to find out the impact of all this chaos in their earnings report, right? So it kind of feels like there's that, hold on, just wait a minute, let's see what the financials say before I do anything there. So, Otaku says, finally caught a show live. Welcome. I got to answer the question then. Shame to say that you had to sell your cash account or tried to find a new place to live. Rough time. Oh, man. Well, that explains why you have time to watch the show. But I hope things get better for you. And I appreciate you watching and hanging out with us there. Alibaba looks to be, it'll be a spinoff in a number of different directions. I don't know much more than that. Sorry. Banks don't do well in a recession. I think most think a recession's not here yet. I don't know, because if people thought a recession was coming, at least the masses anyways, would we not have consumer staple stocks doing better? Utilities, healthcare stocks. Today's kind of a one-off for healthcare stocks, but would we not have things going better there? Would people not be interested in tech stocks, cyclical stocks, really stocks that could be in a tough spot if there's even a minor recession? Doesn't seem like people are positioning that way. So you would feel like, okay, well, why are we holding out on the banks? Maybe it's the earnings thing. We're going to find out. What about starting a position before earnings? So if a big win, well, that's just like any other stock. There's no, so I get what you're trying to do there, but there's no, there's nothing to say that that's any different than, let me start a large position on Netflix right before earnings. You're taking a shot. I don't like that from a stock perspective. I do know people and have done this in the past where you say, I just feel good about these people, whoever's earnings. And so I'm going to use options so that my risk is limited, but maybe there'll be some kind of reward for my limited risk. You think the Fed's going to raise rates more than a quarter point now with, or I don't think they were going to anyways. So it's a quarter point from here on out. And even Friday, you had a couple Fed members already start to push that out where they said they think that it's a quarter point from here on out. However, we are open to doing more if need be. So I think it's a quarter point. That's an easy one for them to slow play it from this point. Yeah. All the layoffs will impact people in 6 to 12 months. Yeah, but we get weekly numbers that show that those people aren't collecting unemployment. So this has been going on. We've been laying off in the tech space, and those people just aren't showing up on the unemployment payroll, so to speak. What's going on there? So that's what everybody's watching. Like as soon as that starts to tick up, now you can you're doing right. You can say, I saw layoffs. I see the impact. People are filing for unemployment. They're not able to find a job. Kind of seems like they're able to find a job at the moment. That's not a very delayed number either. We're talking week to week. Yeah. Yep. We have jobs aplenty. And I hope that personally comes back. Pulls back. Just too much. You call anybody you want these days and say, hey, I'm looking to get a, I don't know, whatever, a new outlet put in my room so I can plug in all my electrical stuff. And they're like, I don't have time for you. I don't know what to tell you. It's kind of a key indication. Just make random calls to people and watch them tell you, nope, can't get to you till September. All right, well, that's all opinion. I tell you, I'm here just for the stats. We've covered everything today. We'll be back tomorrow to do this all over again, and I wish you guys a good rest of your day. Thanks for watching, and that's all I got. See you later.